Okay, let's see how major equities we track in Africa performed that intraday positive. Really good news after the bloody bat we've been having. Nigeria's NGX was trading up at intraday 0.49%. We see the GSE in South Africa, the outlier here, up over 4% at intraday. That's a good number for them after having losing a lot that, following Trump's tariffs. Now, elsewhere, Egypt's EGX was also in the green, 1.59% at intraday. And we also see Kenya's stock markets closing yesterday's session, that's Wednesday session, in red territory, 2.59% down. Hopefully, there will be a rebound today. Now, let's take our gaze away a bit from equities and look to the fixed income markets, where a Treasury bills primary market auction took place yesterday, Wednesday, April the 9th, and about 800 billion naira was on offer. For more insights, Caleb Alimi, Chief Dealer, Providence Bank, joins us. Good day, Caleb. Caleb, looking at the results of the auction yesterday, some things stood out for me in that result. First, the allotted amount was smaller than the offer that was made. Is the government losing its borrowing appetite now?
Thank you for having me, Will. Good afternoon. The government didn't lose its appetite, and the government is not losing its appetite. What they seem to be losing appetite for is expensive funds. The DMO, sold at the maximum rate, especially on the one-year paper, 19.63, exactly the same as it sold at the previous auction. And then they allocated a lot less. They had about 600 billion available for sale, but they sold only 650 billion available for sale, but they sold just a big portion of that because they did not want to go above that 19.63. 19.63 translates to a yield of around 24.5%. So they are looking at their borrowing cost, and that is why they haven't gone for that. You could find that on the 90 days and the 180 days, the 91 days and the 182 days, the rates moved up on those ones, 50 basis points and 100 basis points respectively. But for the one-year paper, they held it stable at 19.63%. That's largely because they're watching their borrowing cost.
Okay, so apart from watching the borrowing costs, so what incentive now is for investors to look at the one-year paper when the short-term papers can give them, 100% return or more returns than the one-year paper? So what's going to be happening to the long end of that curve?
The interesting thing is the longer you hold these securities, the more you earn. So if you're holding, 19.5% for 180 days versus holding 19.5 for 1 year, the return on the 1 year is often higher than the return on the 180 days. So the incentive is still there for investors to go for the longer term papers, because the shorter term ones, you don't get the same return really. So from the return on investment perspective, it still pays the investor to invest in the longer term ones, which is the 1 year paper.
Okay, so looking at returns, yields have been dropping, especially in the US. The Treasury yields dropped since the whole tariff war began. Now, is there any likelihood, I'd like to know, that our own markets here, the fixed income markets, may experience any shocks arising from this? Because we've not seen any drop in yields, or have there been any so far?
So interestingly, what's happening to the US is what we see is a flight to safety. And that's why the US Treasuries is dropping aggressively as it drops. You'd also find that if you watch the price of gold as a commodity, the price of gold is also rising since the trade wars began, or since the tariffs have begun to be announced. What happens is when there is uncertainty, people fly to safety. US Treasuries happen to be one of the highest rated bonds. US Treasuries, along with Japanese bonds and German bonds and gold, are often considered as safe haven assets. So what you find is that when there is uncertainty, those securities begin to increase in price. So the drop in yield from the US translates to an increase in price. Has there been any shocks locally? Yes, there has been, but we'll find that in the OMO space. OMO open market operation bills are largely for banks and foreign portfolio investors. Now, what we've seen is foreign portfolio investors selling off their OMO bills, and then going to buy the dollar. And that's why you've seen a depreciation on the currency as well. About 2 weeks ago, the Nigerian naira was exchanging for dollar around, roughly 1530, 1540 levels. But currently is around 1595, 1600, and that's largely because, or even higher, NAFEX yesterday closed much higher than that. And that's because, we're seeing the FPIs that came into the market around 1570 levels or 1540 levels, they are selling off their treasury bills, buying dollars, and running off to safety. So they are running off to buy US treasuries or to buy gold because they're not sure, what's going to happen to emerging economies if the US continues the trade wars on everybody.
Okay, so what do you think the federal government should be doing at this time to ensure that we protect, to stop this inflationary trend from, taking over, especially the keeping the FX at a certain rate, not letting it get beyond the 1600 levels?
Yeah, the CBN is trying its best. I mean, last week they sold $197 million. This week as well, they've intervened into the market and they'll be publishing that data on Friday to let us know how much exactly they've sold. But I can tell you it's over $200 million. Based on their accounts that they shared recently, we know they have the firepower to continue to defend the naira or to keep the currency stable. This CBN has said what they're after is stability of the currency and not necessarily a particular rate. So they have the firepower, to actually keep the currency stable. They will continue to intervene to supply dollars to the society or to the economy to keep that currency stable, to keep the exchange rate stable.
Thank you so much, Caleb Alime, for your insights as always. Good to have you.
Thank you for having me, Will.